The stock market is tanking. The economy is faltering. The recession risk is looming. What does this all mean for the Bay Area real estate market? We're going to go over the most recent data so that you can see for yourself if this is the right time for you to make the decision. For any market, markets going up, markets going down, markets going sideways, there are always winners and losers for both of them, but there's also a mentality to have. Take a watch of this video and we're going to go over the actual data, what it means for you in terms of your options. Should you give up? Should you actively look now? I will let you be the judge for that. My name is Spencer Su, and this year we've helped over 20 families already successful with their moves at the time of this recording, so it has been the busiest year for us ever. In the last week, we've signed over 5 listings, and we got a lot of activity still going. But because of all this different news, this is impacting a lot of people both on the buying and selling side. So let's take a look together and see what this means. If you want to go over a game plan, my contact details are below, 408-547-4590. Let's go over a game plan, but let's go over the data together first. Okay, so let's go about a little bit of history, and then let's go about what's happening with the current market when it comes to inventory and what you can expect. Take a look at this, right? So as you may have experienced, right, the S&P has dropped quite a bit. I would say it's about 11-12% from the highs. The NASDAQ has been down a little bit more, about 16%. Some of the Mag 7 companies have been down about 25%. So it really depends case by case. Now, granted, that is from the high, and there has been a pretty big rebound from that accordingly. Interest rates wise have kind of remained the same. There was a little bit of a dip before, but right now it's kind of the same, right? You're going to be following this kind of range of like the plus or minus mid sixes, at least on a general macro level. Jumbo loans, higher price loans can actually get reduced to this, already in the mid fives. So that kind of gives you an idea about what's going on. So the next logical question is, what about prices? So the interesting part about this is, even though things have declined, there are signs that things are weakening. Now the question is, by how much? We will find that out momentarily. Because take a look at some of these stats. So you have these stats here of condos and townhomes, residential. If you look at the median price of these homes, you can see they already had a decline from the previous highs that was back in February of this year. So typically people would assume that springtime is the best time to sell, which it historically was, but you never know, right? You never know about inventory, you never know about economies, you never know about the stock market, you don't have any control what Trump wants to do. So as you can see, it has already been on the decline. Now, I suspect that this decline will probably be faster. Because remember, these are all transactions from the previous month, so don't be surprised with that. Now, where the bottom is, I have no idea. You don't know, so don't try to pretend we know this. But that's not all assets. Take a look at single family, right? If you look at single family wise, they have still held really resilient. You can see the April numbers, 2.17 million. It's still higher. It has still been climbing. This is a really big note. So it really boils down to the people, because they see what they see and because of what they're moving for, are still moving into higher priced areas and more valuable homes, as you can evidently see. I suspect that this will probably plateau or also have a decline, but it's just something very interesting and mindful. Now, the question is, does this apply to all areas? So let's just put, for example, we're going to put all the counties in the core Bay Area. So you have Contra Costa County, Alameda County, San Mateo County, San Francisco County. We're going to have it all, okay? Now, as you can see from this is single family. Let's really break it down between the two. So you can see price-wise, even around the entire Bay Area, everywhere has been experiencing this. So April numbers have still remained really, really well. Now, there is some caution to this. Here's the things I want to caution people. Number one, it's the number of home sales or number of new listings. Let's look at this number. It's really, really important. Take a look at the volume. We're halfway through April right now as of the time of this recording. So this may end up to be 4,600. So these numbers are lower than the 2022 numbers, which was a very, very busy time. But they are much higher than 2023, 2024. Okay, so you can see just the number of new listings that are coming on the market that buyers get to choose from. But the thing that's concerning is take a look at the number of sales. Right? Take a look at the number of sales. This absorption rate has slowed down significantly. So you can see that in February, it was very similar to 2024. March was a little bit higher, but they're quite a bit lower than the 2022 numbers, even though the number of new listings has increased a lot. Okay, but if you look at the April numbers, which we're already halfway through, this is not trending well. Right? This is if you times 2, or even you do a little bit of a multiply, let's say it gets to 2,400, 2,500, it's still well below. So you can see the general trend is slowed down significantly. We may not even hit the March numbers, and you can see usually every month it does actually increase. So it's going to be really interesting to see how this continues to impact things, right? Because this is going to be a hindrance. Now, if you take a look at like condos and townhomes, you're gonna see a similar thing, right? So let's take a look at the number of sales in all those areas, right? It's dropped off significantly. Same thing. It's all been the same thing. Look at 415. So even if you times 2, maybe even give it a little bit buffer. Let's say it gets to 1,000 again. 1,000 is way less than what we've experienced in 2022, even though the number of inventory is much higher, right? So if you take a look at this, let's look at the number of new listings. You can see like the number of new listings is pretty high, right? It's basically similar time, like a little bit off from 2022, maybe about 10% off, but you can see the absorption rate is the biggest challenge. And so it gives you an idea what is already trending, what's happening. Now you haven't seen prices reflect that yet because we don't know yet, right? Single family, I hope that prices will probably decline, right? It's most likely, but it's not even a sure thing. Same with the condos and townhomes. The condos and townhomes, though, is a very clear sign that where it's heading. I don't know at the bottom of things, so don't ask me on that, but it also gives those buyers that are actively in the market, you can clearly see you have a lot more opportunities than before. So I'm going to be highlighting who is this good for, who is this bad for. If you are on the fence or you're even thinking about getting into the market, how do you mentally prepare for such a thing? Let's go over it right now. Okay, so you saw the data. Now, in this kind of market, where it's a declining market, high inventory, who are the winners and who are the losers? So the winners of this are several. Let's just think about this logically. Number one, if you are a buyer trying to be buying a place and you're very picky, well, in the hot market, one, you had very little options to begin with. Two, there's also a lot of competition to bid, so there's no guarantee to win. This is the perfect market for you. Number two, if you're looking to do a trade up for a more expensive property, just do it mathematically. If your value has gone down, the replacement property value has also gone down. But if it even goes down to similar percent, you're actually saving more money by accomplishing this move, right? So those that are doing a trade up are it's a very big benefit for those individuals. Number three, someone that has lower money down, right? Think about your terms. Usually with a lower money down option, you have way more risk in a competitive market. When prices are rising, you are at risk of losing your deposit if you don't have enough to cover any sort of appraisal gap. In a declining market, there is no more appraisal gaps, right? That risk is virtually all gone. So the ability to win with low money down could be 0% down, could be using a physician loan, could be using a FHA loan or VA loan. Like all these different things that are there are competitive again because there's a lot less bidders out there, right? So those are all the winners that are happening right now. Now on the other side, who are clearly the losers? We don't know how long this may go for. It could reverse in a month, it could reverse in 6 months, it could reverse in years. So if you were somebody that was like, look, I just want the real estate market to go up indefinitely, I will not sleep well at night unless that happens. I don't know if you're ever going to be buying a house, by the way, but it doesn't make sense to buy a house, right? Number two, if you were selling a place and expecting, hey, look, my neighboring home 2 months ago sold for X amount. I want the same, if not more. This is not the time for that. While spring historically has been a very good time for sellers, this is not the type of market where that's happening. You can see at the end of the day, there are always these nuances of supply and demand and the general economy that impacts these markets much more than general seasonality, right? And so you have to be just mindful of that. So those are the winners and the losers. I think that also the market is bad for those mentally, like some people that unfortunately, or not even unfortunately, the people that bought in the last couple of years, there wasn't like that much equity in it. And I think that a lot of the declines have already got to those levels. So many of them are going to be already under what you may have bought it for. So obviously that's not good. Everybody would love to see their portfolio always grow, but that's not the reality when you just pull different segments that is out of your control, right? And it's also bad, unfortunately, for those that are forced to sell Maybe they got to leave to another area. Maybe they lose their job. I mean, this is a rough market for those people. And so those are all the different winners and losers. And so at the end of the day now, you got to make a decision. You have a few choices to make. Number one, do you sit around or do you just sit up, just straight up wait and do nothing? The dangers of that is several. Number one, you don't know when the home you like actually comes around. Like when I bought my house a couple of years ago, our new place, for this size, we could have waited years and still may not have found something because we wanted specific things about it. Sizable rooms. Like this room is huge, right? We wanted something that had a decent primary bedroom in a specific area, right? Like even if prices dropped 20%, it didn't necessarily mean I could find anything anyways. So finding the right house is always so important because unlike the stock market where you can be like, look, I'm going to do a dollar cost average in. If the market dropped, I'm going to put a little bit more money in it. That's not how it works for real estate, right? It's always going to be a significant amount. And whether it goes up or down shouldn't really impact you either way. Don't get too emotionally caught up of it because it makes no difference. The only time it makes a difference if you needed that money and you needed to sell. Other than that, you're still offsetting the rent. You're getting the tax benefits. You're still generally going to get a long-term appreciation that has been strong. But if you're just timing it by month to month, quarter by quarter, year by year, it's not going to do you really well. But you have to make that decision yourself, right? If you're off the fence, you may as well just chill, do nothing. Like there's nothing to do. You can tune into this real estate show every week. You can see what's going on, but don't waste any time then. But most of the smart people are doing this. They're like, look, Spencer, this is a better market for us. We need to make a move for our own reasons. Commute, schools, more space, divorce, getting married, having kids. All of these are just regular things regardless of what rates are, or regardless of what the economy is. At the same time, they're like, look, I'm happy to mentally be able to buy things at a discount or mentally not have to compete with as many people. Then I say those are the people, let's go. And those are the people we're actively working with, where we're fortunately working with at least like 20 plus people right now as we speak that have agreements with us. Conversely, if you're a seller, you do have to make a decision. Do you want to sell it? Because the prices have done well. Now they are declining, but they're still done relatively well depending on when you have made the move. And there could be capital gains exclusion that you have to be mindful of. Do you actually want to rent it out? Are you okay living in the home that you are in right now? Right? Like how much longer can you survive in that? Right? So these are all the different things that you have to figure out on your side, whether this is the right time for you to make a move or just continue to actively look. Because even though prices are declining, you never know when the home you like will be around. You still got to look in the right areas, right? As much as homes decline, if you have a budget of $1 million for a single family home, you're not going to be buying Palo Alto, so don't be delusional on that. You still got to put a buffer, but now you can put a 10% off buffer, right? The key is still, is there anything that has sold in that time period within 10%, even the last 2 months? And so with that, that should give you a good framework, whether you want to actively look, you want to reconsider, you want to get a value of your home, all of that I'm happy to help. My contact details are below. Call or text us. We can go over a game plan today, and then that way you can get underway to figure out your moves. See you next time. Bye now.